Okay, folks, so this week things are a little bit different. First, I have a conversation with Ood Galifrey from the Occultae Veritatis podcast. He is a fellow leftist and podcaster, and he has some ideas about what's going on with Gamestop, but because our knowledge in this area is limited, we end up speaking to some bigger ideas, some broader ideas, and then we kind of try to get back to the GameStop situation. This episode in full is available for patrons only. I'm going to make this the first half of the episode for everybody else, and the second half of this episode is going to be half of my conversation with my friend David Richards, who is a person who has worked in finance and is my go-to guy on all things finance related. Even though he's not a leftist, he's more of a progressive. He is a left liberal, not a centrist liberal, I would say, but he is a capitalist. So that makes his views maybe not as concurrent with mine, or he might not say things in a way that a lot of leftists that I might not like or appreciate. But you have to understand that he is knowledgeable in the area of finance, and that is what I talk to him about. So that's as much as I'm going to hedge, because David is a really valuable resource. He's a really valuable guy. He's a really great person. And even though we disagree on some philosophies, I think that his insights into the GameStop situation is really important. I will do a little quick bit in the middle, in between, just to say thank you to Ood and let you know where to get a hold of his contact information and where you can find his stuff, and then introduce David's content. So without further ado, I guess I will let you get into the discussion I had with Ood Galifrey from the Occultae Veritatis podcast, and I will see you at the halfway mark. Hi, and welcome to The Mind of a Skeptical Leftist. Normally this show is about progressive politics and critical thinking, but today I was short on a show because I had to work an extra day, and then when I was looking at the news and on Facebook and stuff, there suddenly was this big thing about GameStop and hedge funds and a bunch of finance words that I'm not entirely sure what they mean. So I'm talking to Ood Galifrey from Occultae Veritatis, the podcast, to help me figure out what the hell's going on.
Yeah. And like, I'm standing on the shoulders of giants here. Like, I just recently, in the last little bit, like, learned about what was happening with these Wall Street bets and the stock market and the stock in relation to GameStop, like in the past 24 hours when it hit the news. So, but I think I've learned enough to get a handle on the situation. And the stuff I've learned kind of confirms things that, like things that I've already suspected about, capitalism and the economy and all that. But
right,
yeah, basically GameStop. People might know, if you're a gamer, you might know what GameStop is. They seem to be what are those little bobblehead minis that everybody collects? Yeah, today they function mainly as a Funko Pop sales dispensary.
Okay.
But like, I suppose back in the day, they sold video games and video game accessories. But in today's day and age, people download video games most of the time, or just get them shipped from Amazon or wherever they go to. And with COVID happening, not many people were going into GameStop shops, so GameStop stock was dropping, much like Blockbuster. It was kind of on its way out. And these big investment firms were shorting the stock. Now, this is where things get weird. Now, like, a pure idea of what stocks are is like, a company wants you to invest a small bit in it, and in exchange it'll share with you a small percentage, a small ownership of that company. Right. And if that company is successful and makes a lot of profit, then your small percentage of that company also rises. Like, that's how stocks should work. It's connected directly to, like, the profit of the business. But, like, it's been twisted so much, like, in capitalism. So shorting the stock. These hedge fund managers said, I'm going to make a bet that GameStop's stock is going to fall. And if they were right on that bet, they would have made lots of money. And it gets even more ethereal than that. Not only are they making bets that GameStop shop will drop, they are also making bets. Like, other hedge funds are also making bets on that bet. And other hedge funds are making bets on that bet. So it's like a line of dominoes about to fall. If one company makes money, they all make money. That original that original piece of stock from GameStop, let's just say, for argument's sake, it was worth $10. Right. Like, $1,000 worth of people betting on the future of this stock has been created, so $1,000 in profit. And stuff like this happens all the time in the stock market. People do speculation trades where they bet whether a stock is going to rise or fall based on how much, and then other companies make bets on that bet and a bet on that bet, and you kind of see where I'm going here. There's all this, like, ethereal, like, ghost money based on people betting on what's going to happen with real money, and that kind of creates part of this speculative stock market. Now, this is where Reddit comes in. This subreddit called wallstreetbets, who really, before, they were just like a meme subreddit. Like, they did some investment advice, but really, it seems like everybody on there was trying to be Gordon Gekko, or whatever the fuck his name is, from Wolf of Wall Street. I don't think that's his name, actually.
No, Gordon Gekko is the actual, it's Wall Street is the movie. I know that one.
Oh shit, right. Wait, you know what I mean? The guy that I even forget the actor. Like, they were playing
Leonardo
Wall Street.
DiCaprio on
That's
the Wolf
the one.
Yeah.
That's the one. Leonardo DiCaprio. They're playing Wall Street big cheeses, and they were very memey with it, and they were playing their roles, but they're also doing, like, some light stock market trading. Like, they were trying to be stock market big shots.
Okay.
And they found out that people, like these hedge funds, were shorting this bet.
Okay.
Were shorting GameStop, and they decided, well, if they're going to bet the stock is going to fall, well, we're just going to, as a group, there was no definitive plans, but, like, basically the meme rose in the community that we should buy out GameStop's stock in order to increase the stock. That way, all these hedge funds that made bets that the stock will fall will lose money. And that's exactly what's occurred. All these people, it started on the subreddit, but it spread to Discords. Celebrities have gotten involved, and they're buying shares of GameStop. And the stock is shooting straight up, and the farther the stock rises, the more these hedge funds lose, because they bet millions upon millions of dollars that these stocks will fall. And now all these bets based on bets are also falling. So it's resulting in all these hedge funds losing literally billions of dollars based on just some buying of shares of GameStop.
So I'm not sure I understand what shorting is.
Yeah.
So they're betting that it's going to be lower, so they sell it, or they...
Like, it sounds very sophisticated, and it is more complicated than I'm making it. But at its core, it's one hedge fund going to another and saying, hey, buddy, I bet you $500 million that this stock is going to fall by X amount by X date.
Okay.
And the other hedge fund is going to say, like, okay, I'll take you up on that bet. If you win, I'll pay you 1.2 times the amount you bet. And that's how it starts. And then other hedge funds are watching these starting hedge funds, like, make that bet. And other hedge funds will say, like, I see these two are making this bet. I bet another $500 million that hedge fund A will win the bet against hedge fund B. And
so in a sense, like, if they're betting against each other, does that mean that half of the hedge funds are actually going to be benefiting from this situation?
It's more against the market and the value of the company.
Okay.
Well, like I said, it gets more complicated, and most hedge funds were betting against GameStop's stock, and what they would get back in profit would be very low because it's a very safe bet. They wouldn't be netting very much money. Okay. But of course, since the stock was going on its way down, because there's entities in these companies that determine, like, how risky these propositions are. Like, risk managers determine how risky betting on a certain stock is. And that's how they determine how much is bet and how much, like, will be made if the bet is won or lost and stuff like that. Yeah, okay. but in this case, like, if the price continued to fall, the hedge funds were due to make a bunch of money.
Okay.
Yeah.
And I suppose, like, I've seen some tweets and stuff, people talking about how these hedge funds are often the people who are fighting against regulation. So, but now they're fighting for regulation because they don't want to be this sort of thing to screw them over in the future.
Well, and that's the thing, and I think it gets even more cretinous than that. Like, this practice where you buy stock of a company that's been shorted. So one hedge fund bets that a stock will fall, and then another hedge fund will buy stocks in that company in order to make it rise. Like, these types of economic games happen every day in the stock market between hedge funds and between capitalistic companies. And they're just fine with that, and they want to take regulations away from that. But now that a bunch of, from their perspective, average Joes from Reddit and Discord and Twitter have gotten involved and are doing the exact same thing they've been doing for years to each other, now they want regulation. I've seen figures from these hedge funds come on Fox News, come on One America News Network and say things like, we should put limits on people talking about stock trading on social media. Like,
how do you do that?
Yeah, like these are the same people who were weeks earlier, because a lot of them are right-wing people. Like, a lot of them weeks earlier were decrying, like, a bunch of people being deleted from Twitter because of breaking the guidelines, stuff like that. And these same people are saying, well, we want to limit speech when it comes to stocks because these people, like, got in the way. And, like, those are my thoughts on that.
Yeah, it's interesting. I just saw somebody said on my Facebook, $5 billion hit on Wall Street.
Oh yeah, and rising. Like, and some of these companies are borrowing money from other companies in order to stay afloat. And because it's such a deep cut, some of the companies that they're borrowing money from are threatening to go into bankruptcy territory. And the longer the stock stays high, the more money they're going to lose.
Right.
Yeah, and because there's very strict dates that these speculative bets are made on. And a lot of these dates are coming up, and they're going to have to pay whatever bill they're going to have to pay. So there's a lot of talk on Wall Street Bets about, like, let's hold out for X amount more days and keep the stock at X amount of price, and we can bankrupt some of these hedge funds. And it just goes to show you just, like, how weak capitalistic markets are. That
Right.
Like literally a bunch of shit posters who are doing it for the memes can upset billions of dollars of market value. Money that could go to feed families, or instead of just like being tossed around like gambling tokens on a table for memes.
Yeah, like I did see somebody, I just took a look at wallstreetbets, the subreddit, and somebody said they made like $40,000 already.
Oh yeah. Yeah, there's lots of happy little stories, and like I definitely don't want to deify like the people on Wall Street Bets.
No,
like,
it sounds like they're just like mini petty capitalists, right? Like,
yeah.
So yeah, they're part of the problem too. But also, if they're fucking over these giant companies, then that's good.
Oh hell yeah! Like it's almost like when a lawyer decides to work for like public justice and like does a bunch of pro bono work and stuff like that. Like maybe not even to that level. Like especially when you're talking about people that are just like playing with stocks and all that. Like I've heard a lot of discourse that are portraying these people as like socialist heroes and like people that are like. But like really, I agree with they're kind of petite bourgeoisie that are upsetting the big bourgeoisie kind of thing.
Right? Yeah. Like I did see some in some leftist subreddits, like people posting about like solidarity with the Wall Street Bets, and I mean, in this case, yes. In general, I'm not so sure.
I think the reason people are happy about it is because. Like when this happens every day between like A hedge fund and B hedge fund and A bank and C company and all that, it's like
right.
It's never really interesting. It's never really engaging. Like never reaches the front pages, and when it does, people like don't really care. But this event, it's just funny enough that it's getting a lot of people's attention. Like, oh, these social media people from Reddit are upsetting like hedge fund companies, and all these hedge fund managers are going on Fox News and complaining about it. And it's awesome. Forcing people like me to go out there and half-ass learn what's going on, and it reinforced some of my values that like this capitalistic market that we live within is kind of a house of sand when it can be manipulated this easy.
Yeah, like I mean, I've always kind of thought of Wall Street as fake,
yeah.
but yeah, it kind of tells the truth. It tells the story of it right now. Yeah. Yeah, I guess it's not necessarily fake per se, but it certainly doesn't represent the daily lives of working people, and that's what it's always put up against. Like a good Wall Street means a good economy, but this seems like, what does this even mean for GameStop, the company?
Well, they're likely going to experience some temporary success until these Redditors and Discord people and people from Twitter get bored with them and stop buying the stock. Like I said, let's not deify these people. They're not saving GameStop. They're going to keep on holding on until they feel like they've done enough damage to these hedge fund companies, and then they're going to move on. And these people have plans for future things, like AMC theaters. Like, we all know that movie theaters have been taking a hit in COVID, and AMC is approaching like the bankruptcy levels, and its stocks are being shorted, so hedge funds are betting that its stock is going to fall, and Wall Street Bets is already like eyeing AMC theaters as its next target once it gets done with GameStop. So I think that, GameStop might see its stock rise for a few months, and I think it might plummet right back down after this is all said and done.
Is this likely going to change the way that hedge funds look at these bets? Like, if they can be undermined so easily, like, are they going to just not short AMC and try to make money off of it?
They might go that direction. I think that maybe some hedge fund managers might be a bit more hesitant after this. So I think that will happen. I think it will have a certain chilling effect. But I think what's going to happen first, and I think what's going to happen much more prominently, is these hedge fund managers will more likely solicit politicians and pressure politicians to pass new regulations that'll, take attempts to cut citizens out of the market. This could come in the form of requiring a certain fee that's exorbitant for the regular citizen to do stocks, requiring some type of licensing, saying that only companies or people worth X amount of dollars are able to trade stocks. Like, I think that hedge fund managers may be more hesitant in the future because this has been a big egg on the face of the people that have been involved. But I think what's going to happen more prominently is, capitalists are going to do what capitalists have always done. They see the stock market as a way to make easy money, so they're not going to change the way they make easy money. They're just going to make it harder for regular people to fuck with their processes. And they're going to put regulations in front of it. That's what I think is going to happen. This is coming from a guy who learned all about this the last 24 hours, so people, please do your research.
Yeah, take another look. It seems like... again, I know almost nothing. I've never studied finance. I just know, bits and pieces of economics. But Wall Street and economics don't seem to be on the same page. So, so this is a whole different game for me.
Well, a lot of very rich people and a lot of stocks saw some amazing returns during COVID. Like in times when people's quality of life was being continuously threatened more and more every day, as the rent checks stacked up and as the debt stacked up and as work diminished. Some of these companies and some of these stocks and some of these rich people were seeing returns like never before. So it makes you wonder when the economy and the stock market really isn't linked to quality of life, what are we really measuring?
Well, yeah, that's just it. It's a measurement of the wealth that the powerful have.
Yeah.
I guess.
Yeah.
Yeah, I don't know. Am I missing something? I feel like I don't know enough about this to ask the right questions.
I just see it as like, a sign of how ethereal these money markets can get. Like, when we hear about, like, the GDP of the US and, like, all this money being produced and, like, all this productivity being produced, and the USA is a very successful country, we have to remember that in part of it, it's a bunch of these highly capitalistic, like, economic organizations, like hedge funds, making bets on money that are totally ethereal. Like, a company worth $100 million could have, like, billions of dollars worth of hedge fund bets surrounding it based on whether its stock is going to go up or down. So that $100 million worth of value suddenly has billions of dollars attached to it. Like, it's like inventing money out of nowhere, finding new ways to gamble in the stock market. Like it's a messy and complicated situation. But
sounds like it should be illegal.
Yeah, it just seems like the takeaway message is like this shows just how weak our economic systems are, and just how easily they can be manipulated. And if they're this volatile, can we rely on them to create a consistent quality of life for the people that are living within those societies that those stocks measure?
Yeah, I think, and I imagine we both come down on the answer is no, we can't rely on them. It's a constant. Maybe this is just a microcosm of the entire capitalistic structure, because it's always a boom and bust. It's always a bubble that bursts, or like something is in high demand, and then everybody has one, so the demand drops off, but the supply stays high, right? And so then it becomes worthless. It happens over and over again. Yeah,
you can't just make something and sell it, like, to survive in most markets. Like, you have to take advantage and innovate and pressure and, like, hook people, and, like, it like it's taken this barter system, this little system where, the baker wants shoes and the shoe repairman wants bread, and like we figure out a system to make sure they both get what they want. It's taken that and it's turned into this system where it's benefiting all these rich companies, and not like we're not getting bread and shoes anymore. Like, it's been tipped.
Yeah, what's the defense? It's always like, because we say that labor creates value, right?
Yeah.
And the defense is always, well, without investors taking a risk, then you wouldn't have any materials, or you wouldn't have the building that you can start in. And these are all ways, it seems, that the wealthy just control. Like, it's not actually a risk to them. They control the buildings, they control the materials, and then they give it to you, and then you make something valuable. Like, not, as a theory, I guess, but you can't just bake a cake because somebody else has to buy the store and the materials, and apparently you can't just do it on your own because they won't let you.
Yeah. No, like, and I say things like, this system is volatile and these stocks are volatile, but like, the hidden secret is, like, all these things are working as intended.
Right.
Like, there's like, over the years, all these policies and all these rules and all these laws have been constructed to make sure that those that begin with money usually end with money. And those that start without money usually end without money. And it does that by consolidating power. Like, controlling the building that you work in and the ability to provide to workers is an advantage all of itself. And if you start with that advantage, usually you can pass it on to your kids, and usually you can afford to take those risks. When for the worker, it's often like it's a dependency issue.
Yeah.
Like, you don't choose to make a risk. But like you can just choose to be comfortable. You have to make that risk in order to survive. You have to work and buy stuff, and it's not the same kind of risk. Like, it's much more a risk to the worker. Yeah. Because you're being forced to work for an inadequate wage, while the rich person, like, whether the company succeeds or fails, they'll probably be just fine.
Yeah, that's exactly right. If I don't work, I don't eat.
Yeah.
So that's right. Like, I have to be out there doing whatever it takes. And that, if that means I'm on the road, doing gig work, then that's where I have to be. And if that means that I'm working in the oil industry with volatile chemicals and odors and gases, then that's where I am too, and it's just, there's risks in being a laborer that don't seem to get recognized as much. Yeah. It seems like, the advantages are all tipped in one favor, like, and especially since, like, the power of unions, like, especially in America over the past 2 years, but in Canada too, have been diminishing. Like, we can't make the same demands upon business owners that we used to be able to, because unions just aren't as strong anymore. We can't bargain for things like we used to be able to. And that was one of the only tools that we used to have. Like, well, you want to use all of our labor to get something. Well, we're going to stop the labor until you agree to give us what we want. Right.
And, like, that power, that little bit of advantage we used to have has been diminishing, and
it's I've heard other podcasts talk about it too, is like, because of this propaganda campaign that's kind of been going on for decades and decades, pitting worker against worker, or like pitting worker against the unions itself, that makes, it reduces the power of the union, because even if, say, we all want to go on strike, well, then they can bring in a bunch of scabs who just are anti-union workers who don't give a shit. Which
they portray unions like they portray socialism. Like, whenever they become involved, like, that company falls or that country falls. Like, they say, like, oh, don't let unions affect your worker base, because, we've seen it 1,000 times. The company falls right after that. Like, these employees don't understand what it takes to run a company, and they make demands that they don't understand. And, like they think there's some secret plan going on behind the scenes that the workers wouldn't be able to understand. So this lowly wage that they're given is really the only thing that can be afforded.
I was talking to somebody the other day, and they were saying, like, well, unions would be great if they actually represented the workers, but instead they have their own structure, and the people at the top always seem to be the ones who do the best. And I had to be like, well, that's not entirely right. Like, depending on the union, because different unions have different structures, but like the people who run unions, who are in charge of the unions, are usually elected to those positions. So they do, if you don't think that the union leader represents you, then you can vote that person out, which you can't do with a boss.
Oh yeah. Yeah. And like there's good and bad that comes with it. Like, unions as they're conceived, like, should be a system where the leader of the union can have his power or her power or their power taken away as soon as they're not meeting the demands of, the union members below them. But depending on how the union is implemented within the company it belongs to, like, I've seen union chiefs that are all too willing to kind of, I guess, bend to the will of company management, and
right.
Like, the union members might have to just, like, put up with it for another year because the election's coming up in a year, and for that time, the head of the union gets to kind of just bend to the will, and, like, in a year's time, maybe he'll get elected out, maybe he won't, kind of thing. And
that's one of the things about this Unifor lockout that was happening here. That's I don't know the exact details, but I was told that the workers didn't get what they wanted because the union didn't fight for it. So then they actually ended up being locked out and losing what they wanted anyway. And they were locked out for like a year or something. Like, I can't even remember. It was a long time though.
Yeah. Well,
or these co-op refinery workers, that's what it was. Unifor was the union.
Yeah. I mean, like, I don't know, being a bit snippy here, like, I don't know, some heads of unions seem a lot like the Democrats, a bit too willing to negotiate,
Right.
Yeah, like, I understand that, but, like, unions, as they should be like a democratic platform for the workers. Like, we like, I agree with democracy. Like, democracy is a great system. Like, citizens should have their say. So why shouldn't that include the workplace? Like, I think
of course, yeah.
I like, why would we all agree to have a democratic system of politics and then agree to some totalitarian system at our workplace? Like, it doesn't make sense.
Yeah, I mean, that's the thing. Like, I have said in the past that democracy doesn't work, but what I mean is this representative democracy that we have, where people stay in power for a term and then they can campaign and spend millions and have big money backers. This system doesn't work.
Yeah.
Direct democracy, much more democracy at the workplace. Those are all great ideas. I think, like, you could have a much better society if everything was more democratic. Where can people find you?
Well, I'm known as Ood Galifrey in some spaces. You can find me at the Occultae Veritatis podcast. By the time this goes out, our first episode, actually, of our Neil Stonechild coverage will be out. We read through an 8,500-page inquiry into his death, and we have some opinions. Offpod.ca.
That's yeah. That I'm very interested in listening to your guys' thoughts on that. I have my own.
Yes.
But I'm interested in hearing yours for sure.
Excellent.
All right. Well, thank you very much for this emergency get together to cover something that happens to be in the news right now.
Oh yeah,
And I'm not convinced we'll be there in a week. So
yeah. I almost hope that David's able to come on just so I can see if I'm talking out of my ass or not. So we'll see.
yeah, I don't know. I kind of expected him by now, but
yeah. All right. You have a good night, Corey. Eh?
You too. Okay, so as you can see in the first half, Ood and I are kind of talking out our ass a little bit. We can explore some big ideas, but as far as the specifics as to what a hedge fund is or what the effects are going to be after this incident, we have very little idea. If you want to listen to the full discussion with Ood, you can find that at patreon.com/skepticalleftist. Otherwise, if you want to hear more from him, you can check out ovpod.ca. And I think that's everything for now. I will leave you for the financial literacy part of the episode with my friend and financial advisor. He's not my financial advisor. He is a financial advisor. My friend and a person who is a financial advisor, David Richards. I got my friend David Richards here with me. I talked to Ood Galifrey from the Occultae Veritatis podcast, but he also is not a finance guy. So,
right.
So I kind of laid out what was going on with the Gamestop thing a little bit with him, and we kind of bantered back and forth. But you have a much firmer grasp on this kind of information than I do. So.
Not the type of investing I actually do or do for my clients, because for all the reasons we're discovering this week. But yeah, no, definitely this is where my training lies in understanding this stuff to some degree. I work as an investment advisor, have been working in finance and banking for over 20 years. So somewhat rudimentary understanding of it. Again, this is a type of investing that is very different from what, honestly, from what most people will do with the bulk of their investment money. More and more people are getting into like discount brokerages and doing trading on their own and stuff, which is sort of what one half of this story relates to.
Okay.
But the underlying type of investing that was going on is not really the type of investing. Like this isn't the type of investing that you're seeing with, person's pension plan or RSPs or stuff like that.
Okay.
Most exposure to the stock market is a lot more sane than it's made out to be in public media, and what we get to hear about when stuff goes wrong. But I didn't obviously get to hear sort of what you and Ood were discussing, so I didn't sort of know what you've talked about already. But
yeah,
what questions did you have, or what sort of has you puzzled about the whole thing, or what backgroundy type information do you want?
From somebody who actually knows, I want to know what is, for starters, what's a hedge fund?
Okay, so a hedge fund. Super high level, a hedge fund is anytime you're talking about a fund is just a pool of money. So you have hedge fund managers, or any fund manager manages a pool of money that is being used for investment strategies. Hedge funds specifically deal with high risk investment strategies, and usually dealing with borrowed money of some kind. Anytime you're dealing with a hedge, there's money being borrowed in one way or another. In the case of the GameStop shares, it was essentially a type of borrowing called short selling. So a normal investing is long selling. If I'm buying a share normally, I'm buying a share of that company. Like, it is literally a share of that company. Whether it's privately traded or publicly traded. A privately traded share, me and 9 of my friends are having a company together. Each of us owns 1/10 of the company. We each own one share of the company. That share is worth 10% of the company. There you go. When you start dealing with publicly traded companies, things get a bit more complicated. But ultimately, underpinning all of that is the same general principle. And the idea being, like going back to that simple version of things, me and my 9 buddies, the value of our share is the value of the company divided by 10. Like it's really like at its core, that's what you're dealing with. And even with a publicly traded company, you're dealing with, what should be the true value of a share is the value of the company divided by the number of people or the number of shares of ownership. It gets more complicated because it's really tough to say how much a company is worth. And there are lots of different ways of determining the value of a share. At its core, one of the things we're doing when we determine the value of a share is actually just straight up look at the company itself. Go bottom up. You're looking, what are the fundamentals? What's the industry it's in? What assets does it own? How much money does it have in the bank? What risks is it likely to see? Things like that. And you sort of determine value from that. Myself, I often specialize with clients in what's called ESG investing, so environmental social governance. So very much looking at are companies environmentally sustainable? Do they have good social development? Do they have, good governance, things of that nature, as a way of mitigating risk, but as also a way of helping to determine a real value of the share. There's other ways of looking at share values that sort of is more along that gambling type way where you're looking at what is it buying and selling for, treating it kind of like a video game. Obviously you can see where where my attitudes are on that, the way I speak, but and that is you're looking at trends, you're looking at what direction things are going up, which directions are things going down, you're looking at other companies in the industry, and that can come into play too. I'm not saying that you should never, that doesn't play any role in stock valuation, but it certainly isn't, again, it's the flashy stuff that you see on media. It isn't the only thing that's there. You really want to look at the fundamentals. Now, getting back to the issue at hand, short selling is literally the opposite, where you are selling a share you don't own. So these hedge funds essentially sold in the future shares of GameStop that they themselves didn't own.
How do you do that?
So you've made a promise. It's on such and such a date, and there's rules on the dates and stuff like that. But where I basically say, I'm willing to sell, and I won't use GameStop. I'm willing to sell 100 shares of ABC company on March 1st, again, there's rules around dates, and I don't want to get too hung up on that, but I'm going to sell 100 shares of ABC company on this date for $50 a share. I basically promise that I will sell it for that price. And the idea being is when that day rolls around, I'm gambling that the value of that share will have dropped, and now I'm basically, the value of that share is only $40. So I'm now selling a share for $50 for $40.
Okay.
Right. So but the risk then comes in where there's unbounded risk. So if I buy a share with the assumption that I'm going to sell it at some point in the future, there's a chance that I could have a total loss. If I buy a share for $50 a share, I buy 100 shares for $50 a share, I plan on selling it at some point in the future, and that share, the company goes bankrupt. It was a something went wrong, goes all the way to zero. Even on a bankruptcy, normally I don't lose everything. But again, let's say I end up losing every single penny of value of each of those shares. It's not worth anything. I lose $50 a share, which isn't nothing, right? Like, that's 50 times 100. I'm dealing with $5,000 that I've lost. It's, buy a lot of lunch for $5,000. But with a short sell, I've now agreed to sell these 100 shares for $50 a share. Yeah, I could totally, if I had bought shares, I could lose $5,000. But let's say the value of these shares goes up to $500 a share. Now I have to, because I now owe someone. I've essentially borrowed these shares. I now have to return these shares. I now have to come up with 100 shares that are worth $500 each. So now I haven't just lost $5,000. I've now lost $50,000.
Right.
Depending on how much the share value goes up. So there's unlimited potential for loss in short selling. And again, there's trade-offs to it. And a lot of these ideas within stock trading had their roots in valuable mechanisms. A lot of this comes out of, if you think, there's it's called the futures market, usually in commodities. So I'm a cattle farmer and I want to have feed. So 6 months in advance, I buy a bunch of grain for a fixed price in advance. So I know what that input cost is going to be. So if the price goes up, I've definitely saved money. If the price goes down, I paid more than I should have, but I locked it in advance and it mitigated the risk. So there's things like that.
Okay.
So anyways, there's tools. I don't want it to seem like all of these tools that exist were just random silly things that stockbrokers dreamed up in a fevered dream one night. There's underlying reasons for why most of these strategies exist, but again, they're high risk. So again, for an investor like myself, for clients that I speak to, we're avoiding things like short selling most of the time because it's just not advantageous. It's not the investing shouldn't be a game. You shouldn't be doing this as a thing you do for playtime.
Right.
And I've talked to some people who really like the playing aspect. I say, you know what? That money don't keep with me. You have your self-directed investing. You put, a bunch of money in there that you can buy and sell stocks with because it's fun. But that's not your real investment. That's not what you're saving for retirement. That's not what you're saving for a home or to give to your kids or stuff like that. Like that's your treat that as something that's fun. Like you would put money aside to go to the casino.
Okay.
But these hedge fund guys are function a lot differently. So there's these hedge funds that made a big gamble. Well, what essentially happened is some folks got wind of this and knew that this was happening.
Okay.
And my understanding is that it was on Reddit, and these were a bunch of people who got wind of what's happening, and they liked GameStop. It was a company that they liked as well. So that the perfect storm of they almost took it as an insult that their company was the company that they liked was being short sold, because again, the hedge fund predicted that the value of GameStop shares would drop, and they would make money by short selling. And so they got wind of this and basically organized a buying of these shares, and got together, buy up all these shares to essentially artificially inflate the price. Now, again, I couldn't do that. I would lose my license if I intentionally tried doing something to artificially inflate a price.
Right.
There are very strict rules about that. But when you're dealing with things like people just buying it independently, these aren't, these are just people who are doing it through the internet. It's Yes, it's just people doing it through the internet. They don't have a license to lose, and again, there's talk of legal action and what can be done, and there are governing bodies that look over stock exchanges, and one of the duties of those bodies is to ensure that stock markets aren't treated like playthings. They don't want this to be playtime. They don't want,
Right.
and again, that goes in both directions, right? That's not just we want to, punish the people who are taking advantage of the hedge fund managers. A lot of these rules are in place as well to prevent the very type of shenanigans that caused this problem in the first place.
Okay. Yeah.
But
So
anyways, the GameStop guys got wind of it. They scooped up all of these shares, and now because of that, the short sellers don't have readily available shares to buy. Now,
okay.
what my worry is other people have got wind of it, and they're trying to get in on this as well to try and make money off of it and try to make money off of these hedge funds. I have concerns about the people who, not the hedge fund managers, they knew the gamble that they were making. But there are people now who have heard about this and are doing I should get in on this as well. I'm going to buy $1,000 worth of GameStop shares so I can get in on this as well, only to not be able to sell it in time. And then all of a sudden, the second these short sell transactions go through, the value of those shares plummets right back down again.
Yeah. Which is inevitable, right? In some sense.
Yeah. Well, and again, this is where I talked about at the very beginning, when you need to look at the valuation of a share to begin with, is these things are real things. This isn't, I think there's this idea that the stock market is like a casino, is like it's a roulette wheel or what have you, where it's all random and things goes up or down, and there's the house is guaranteed to win and all of this stuff. Where it's like, no, these are real companies. Like GameStop is a real company. It has assets. It has cash on hand. It has sales. It has quarterly earnings. You need to look to its future and all of that. So that's that at its core is something that needs to be looked at as for what these shares are worth. It's, again, when I talk to clients and talk about whether a share is overvalued or undervalued, that's what I'm talking about. I'm talking about its core value. And I have been doing this my entire adult life in one way or another, not always as in the investing side, but in banking. And I don't make those guesses. I have people I can leverage who are way smarter than I am and have access to way more pieces of information than I do. So for me, if I had a client who wanted to buy GameStop shares, I would reach out to some, usually if they're insistent, I put through what my client demands that I do, or don't, or say, no, if I really don't feel it's ethical, I'll say, no, sorry, I can't do that. You'll need to do that through someone else. And if I can't be your investment advisor anymore, that's fair. I'm going to follow my ethics. But let's say it's this is a year ago when someone's interested in GameStop. I talk to my portfolio managers. They do the research. They have the ability to literally call up the CEO of GameStop and say, "Hey, send over your blah 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 documents so that we can do an analysis of that to make sure it's a good buy or bad buy." So but again, we're not just looking at what do we think some magic crystal ball says about markets going up or going down. It's what's the value of the company divided by the the number of people who own this company or shares of the company, and that's what a share should be worth, right?
Yeah.
So, and again, you're dealing with other things like what debt does the company have, and there are different levels of shares, common shares and preferred shares and things like that. But
one of the things, like, because I've always kind of thought of the walls like as Wall Street or the stock market as fake, right?
Yeah,
but what you're saying
a very
is,
common perception. It's not 99% of the stock market is not. Like the vast the vast fundamentals of it are real tangible things. We've just layered on top of it so many
all the speculation and
so many other things that
stuff.
Make it more complicated than it. I don't say that it needs to be, because again, most of these things have reasons for them, but it's. You and I have been friends a while. I think in analogies, and this is a weird one, but the stock market's kind of like a hamburger. There's a cow there somewhere, right? Like it's really hard to see the cow underneath everything else that you're doing with it when you have it as a hamburger. But at its core, there's still real beef there. And that's the same with the stock market. It is still a way of people buying and selling portions of real companies. Or real things.
That have real stock and real value.
That have real value, yeah. They exist. Now, in the modern world, there's so many things that are tough to put a tangible value on. Value of brand recognition. How many dollars is a brand recognition worth? Right.
Yeah.
So and what's the potential for something to earn money? It's why you sometimes see these initial share offerings where a company goes public for the first time, and very shortly after it goes public, the price goes way up or way down because just someone somewhere didn't do a good job of determining what that initial sale price should have been.
So like when Uber went public and they ended up, the stock price was way lower than they had thought it was going to be. Right. And that might so what exactly is happening there?
Okay. So I won't talk about Uber specifically, but essentially when a company goes public, again, you're selling a portion of the company, and the company will hire professionals to figure out what that is worth
based on their stock, their
like their analysis of the company, what potential for earnings, inventory, assets.
Okay.
And again, things like Uber are tough because a lot of it's intellectual property, right? Like, what is the value of a network of independent contractors? Because they're not even employees, right? These are independent contractors. Right. So what's the value of that? And I don't envy the people whose job it is to figure that out.
Right.
So you have I don't say a person, it's a team of people who try and figure that out. And they will essentially sell it at a price. And then from there, it's going to go up or go down because, again, a stock is only worth as much as what someone will pay for it. Like, again, how much is an apple worth? Well, an apple is worth whatever the grocery store can sell it to you as a customer. Right? Like that's the value of an apple.
Essentially.
The share prices are the same thing. They're only worth as much as what someone will pay for them. And the stock market is a market. It's kind of like almost like an auction. It's a bunch of people want to buy something, a bunch of people want to sell something. If the people buying are willing to pay as much as the people selling are willing to sell it for, a trade goes through. But that's what we talk about when we talk about what a share is worth. It's what did it trade at? So
Okay.
a trade. So you'll have at any one time you have ABC stock. I'm hoping that's not a real stock, but like ABC stock. And you have 10 people wanting to sell ABC stock, and 8 of them are willing to sell it for $10. One of them is willing to sell it for $9, and one of them is willing to sell it for $8. And they each have one share they want to sell. And then you have some people coming along who want to buy it. And let's say no one's willing to buy it for more than $7. No trade go through.
Right.
Right? It just so that stock just doesn't trade. So you have 10 people wanting to buy it, 10 people wanting to sell it, and there's no transactions. So the value of that share is whatever it traded for the day before. Because we don't know if it's worth the $7 that people are wanting to buy it for, or the $8, $9, and $10 people are wanting to sell it for, because none of those transactions went through. But typically a transaction will happen. So someone now, maybe one of the people selling it is willing to sell it for as low as $7 after all. So one trade goes through. Now all of a sudden one of those people who wants to sell it for $7 is willing to buy it for $8. So another trade goes through. And it just sort of, all of this is happening in real time, and people are making decisions. And again, computers get involved now as well. So the computers are doing these comparisons virtually instantly. And things are going back and forth at a super fast rate. So it's not big crowded trade floors with people, shouting at computer screens. But essentially that's what it was. Like, those look like just mass chaos, but essentially they are the same as any other auction, with an auctioneer going, who's willing to pay who's willing to pay $9?
Okay.
Do I hear $9? Do I hear $9? Do I hear $9.10? Like, it's not that. But in a large extent, that's the underlying fundamental of what's happening in the markets. And
Okay.
again, these are real dollars and cents things. And with the short selling, it's people are getting fancy with it. And people are, promised to sell something that they themselves didn't own. They essentially borrowed shares. And now that it's time to pay back the shares that they borrowed, that's really expensive to do because the shares are now worth a lot.
Right.
But again,
Right. So,
it's all of these people who have bought them up. If they're like, and I'm hearing, I've made blah, blah, blah much money on this. And all these people have made so much money. They haven't actually made it until they sell those shares. Yeah, they may have bought shares for $18 and now own the shares worth $350. But until they actually sell it, they haven't actually made that money yet.
So what happens there? Do they say you're the first guy who starts selling and it's at $350? Do you, like, unless somebody's willing to buy it at $350, you can't sell it. But right. What do those hedge funds have to do? They owe that stock to somebody, right?
They have to buy it. So they'll buy it for whatever's the cheapest and work their way up.
Okay.
And a lot of them are cutting their losses. But from what I'm hearing, there are, some of these hedge funds have already said, nope, we're going to cut our losses at this point. We're going to buy it now at $350 or whatever it's at. $347, I think is the last I saw, is where it closed. So that we have the inventory on hand, because we'd rather eat the loss on 347 than eat the loss at 500.
Right.
Because if it goes all the way up that. But again, the holding on to it, the longer you hold on to it, the more money you can make, but the more of a risk you'll take. And here's, like, again, this is sort of stock market 101, or just free market 101. The key to making money is, buy low, sell high, right? Like, that's just really common sense stuff. The human brain is weird. We are most excited and we are most optimistic about things as the price is going up. So what ends up happening is, as
We're
things are going
waiting.
up, that's when people are most likely to hold on to it when they shouldn't. Our brains tell
Yeah.
us to do that. And as it's going down, people start getting depressed about that, and they're more likely to people's brains will trick them into buying high and selling low, essentially. And again, this is where one of my jobs comes in. I don't say half my job, but definitely a good portion of my job is speaking to clients and saying, "Hey, we have a plan. We're going to stay the course. We know what we set out." When you and I met initially, we set out a plan. This is a 30-year plan. This is a long-term investment strategy, a long-term wealth planning strategy that is not designed around giant peaks and valleys, but is designed around a constant rate of return. And we know we're going to have ups and downs. We know there's going to be times where it dips. We know there's going to be times when it goes up. But as long as we stick to the plan, our plan took into account that things like bumps on the road can happen. So it's just about keeping people not panicking and doing the exact opposite of what they should.
Right.
Whereas some of these people who are now jumping in on the GameStop thing, they're doing it through. Again, I don't want to disparage people doing this on their own. Again,
I know.
I wouldn't. I would never do it for me.
Right.
I have the training and I have the background. I would never do it with real money. I would do it again, this is not this YOLO, this whole you only live once thing is often done. Let's go have
Right.
adventures. But its original meaning was literally the opposite. It was no, if you screw this up and you lose all of the money you would set aside for retirement because you thought you could get rich quick, you can't do it. You can't get a do-over. You can't reload from a save point and go back and just invest in something safe at that point. So
it's meant to be hold on, stay safe, not throw yourself out of a plane.
Yeah. And this doesn't have to be and by say safe, I have clients whose risk threshold still falls into what I would what gets classified as higher risk or very aggressive, and are looking at good rates of return year over year or potential for it. But from a stock perspective, even very aggressive doesn't even begin to start covering what some of these people are doing with the GameStop shares, because they are literally investing. These people buying it now in hopes that it's going to hit 500, and so they're buying it at 347 in hopes that it'll go up to 500.
That's the wrong time.
Yeah, they could literally, wake up next Monday and not be able to sell it for more than $10.
Right.
And they just bought it at 375 because everyone buying it against the hedge funds are buying are basically buying long, and which means their losses are limited. They can't lose any more than they've spent, but they can still lose every single dollar they've spent.
Right.
That. So if they buy $10,000 worth of GameStop shares in hopes of it turning into 15,000 overnight, they could wake up and find not being able to sell it for more than a few hundred.
Yeah.
So those are risks that regular everyday people are taking because someone somewhere told them this is a cool way of screwing over these hedge funds. So that's where the danger part comes in. Whoever thought of this initially, great. You know what? You found a loophole in the system. We'll see what the governing bodies of the stock exchanges do to address that. But
so I just want to go over this and see if I understand this entirely. So hedge funds, they don't own any GameStop. What they're doing is telling somebody else that they are selling them GameStop in the future.
Yeah.
And then when the date comes, they have to buy that GameStop stock at the price that it's at and then sell it to the person they promised it for the price they promised.
Yep.
And then somebody got the idea to buy this out from under them, in a sense, and a whole bunch of people did it.
Yep.
And because people kept buying it, the price kept going up, and now hedge fund is going to have to buy it at $350 a share and sell it for $50.
Yeah. Well, that's probably I haven't looked into this all that closely.
Right.
So
the details don't matter as much as the general idea.
General principle, yeah. And again, this is one of those stories that it's so far removed from the type of investing
right.
that someone like myself deals in. And again, I'm even being somewhat critical of hedge funds, probably more than I should. They provide a service as well. The reason they are called hedge funds is they essentially what they sell is the opportunity for others to hedge their bets against unforeseen market changes. So, that's the people who were on the other end initially from the hedge funds would have had reasons for doing that, so that they basically wanted to lock in a price for that share in advance as a safety valve.
Okay. Do you want to plug anything before you go?
You know what? People are interested in finding out more about what I do, they're certainly welcome to. My website is david-b-richards.com, or they can email me at david.richards@rbc.com.
Perfect. Thank you very much, sir.
All right. Thanks, Corey. Bye-bye.
David wanted me to mention that he also runs bi-weekly financial literacy webinars, and the more information is available on his website. That's david-b-richards.com, and also you can find it at ca.rbcwealthmanagement.com/david.richards/webinars. I will actually put that into the notes for this, just in case. Okay, well, I'm not entirely sure that I know enough, even after these discussions, to have a firm conclusion on what's happening. A lot of news has come out since I did these. A lot of people have done their hot takes, and there's been a lot of interviews with experts and this and that and the other thing. And Robinhood, the company that was letting everybody buy and sell stocks, they stopped everybody from doing that except after a certain time. And it just seems like this is an ever-evolving story, and the implications of it aren't as clear as initially thought by a lot of people. A lot of folks seem to think that it was going to be cut and dry, very clear, that this was a good thing because it was going to be punishing like hedge funds, and I'm not sure that's actually what's going to happen. From what I can tell, there are people saying that some of these hedge funds might have like regular people who have invested in them, and this is one of the ways that this hedge fund like hedges the bets to secure the earnings of these regular people who are like looking for retirement savings or what have you, in addition to potentially harming regular folks. This situation is not one where a person who has savings should be working in this just in order to screw over like hedge funds and whatnot. I know it sounds really good, it sounds really radical, but dying of starvation because you're 60 and we haven't overthrown capitalism is not, in my opinion, radical. I know that's not cool to say. It doesn't sound like I'm changing the world by saying, hey, don't do it this way because you still need to exist in the world as it is. But that's the truth. And I don't think we should get caught up too much between, trying these kind of tactics. I don't know what the right tactics are. I'm also struck by the idea that the people who did this, the Wall Street Bets folks, many of them are not on the side of, they're not angels. They're not comrades. They are, in fact, petty bourgeoisie, or petite bourgeoisie. They're little capitalists. They want to do this to get rich. They don't want to eliminate the rich. They want to replace them. And while this might have an effect in the short term to one hedge fund company or another, and what's going to happen is these companies and the government are going to work together to secure the financial future of the wealthy anyway. I'm not convinced that this had the effect that we all would prefer it had. I understand the spirit of leftists who are on board with this, and I believe in that as well. I just, long term, this might have hurt more people who didn't deserve it than one might have hoped. I don't know. I'm not a financial expert. Talk to your financial experts about the what they think the effects of this are going to be. I'm not a fan of the type of people that they would have on mainstream media, but even on leftist sources that I've listened to or watched, they have kind of been like, yeah, this isn't that great. This isn't the revolution that we want. We want a revolution that changes the structure of society, not works within it to make some people rich and take away from the billionaires. Now, there have also been people who have argued that the moving of money, the shifting of the money from one group who is hoarding it to a group that is not, or that might spend it, that is a good thing. That is, yes, a good thing. I don't want to pretend that nobody's going to get hurt from this, though, and I don't want to pretend that the Wall Street Bets subreddit is filled with comrades. So that's where I stand. As a person who cares about other humans, I worry that this will have a worse effect than we had hoped. And while I admire some of the people who did this, who had devoted some of their money, even a small amount, to try and stick it to the man, their spirit is in the right place. I'm not sure that this is because of the way the system is set up, because it's already set up so that the rich always win. This isn't the way to fuck them. But I hope I don't lose too many leftist listeners because of that take. I just don't want to see regular people hurt. And I worry that this is just going to make these companies stronger in the long run, and not even take money from the rich, but just take money from regular people that the rich investment companies and stuff that they're using. So undoubtedly somebody wealthy ended up having to pay out a lot. But if you want more information on the financial side, listen to you got to become a patron to listen to my full discussion with David, and to listen to me and Ood discuss a variety of leftist ideas, as well as kind of react to what we knew at the time. Yeah, go be a patron. You can hear what else, more information. Everything that you give me is appreciated. I'm going to just roll this on into my regular pre-recorded outro now. So thanks for listening. I hope you found this informative and entertaining, and that you'll come back next time. That's all, folks. Thanks for listening. Remember to share this show with your friends and on the social media site that you use the most. Thank you to everyone who supports this show on Patreon. Every dollar I get makes it so that I can spend more time working on this show and the other shows I'm involved in to bring you high quality content. If you want to contribute, you can do that at patreon.com/skepticalleftist, or you can send me money on PayPal at paypal.me/brainstormpodcast. If you can't contribute financially, then a 5-star rating and a review on your podcast app of choice or one of the podcast review sites like Podchaser would be great. If you want to find more from me, then make sure to check out my Linktree at linktree/skepticalcorey. You can find all my social media stuff there, as well as links to my other shows, which include Skeptarchy, which is a panel show that I do with some very smart people, From Many People's Strength, which is a podcast about Saskatchewan politics, and The Feminist Family, which I do with my partner. My Twitter is @HardcoreSkeptic, and my Facebook page is The Mind of a Skeptical Leftist, or you can send me a friend request at facebook.com/cjbrainstorm. I accept most friend requests. Thanks for listening, and have a good one.